Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy Wednesday morning to you all. About 10:40 on the West Coast. Did about an hour and a half rant with the good people here this morning. Covered everything from geopolitics and actually, probably we have to figure out a sort of homogeneous name for this person. I'm not quite sure if this is a man or a woman. Could be both. Anyway, we now know who's wearing the pants, or the skirt of the pants, or the skirt of the pants. Anyway, we had a long talk about them. And also, too, the simple fact that, they're freaked out about the broader economy. 10 million slaves unemployed. Got to get those slaves back to work to pay the goddamn banker tax. So that's the only thing they care about right now. And that's sort of the message that I heard listening to their testimony in front of Congress today. So whatever means necessary. The interesting thing is we live in a world because of all this fucking debt. Thank you, these people. They conned basically all our leaders into believing that we could live in this debt world and it wouldn't be that big of a deal. But we live in this debt world now, and it is a big deal. Think Japanification. Don't expect a hell of a lot of growth out of our societies for the next decade or two. But our societies have to grow. So what do? Well, I would imagine the parts of the economy that are growing, oh boy, they have got the green light. And I hate to say it, but I think that's exactly what you're seeing in the marketplace. Broader market, kind of like the breadth of the market. A lot of kind of wishy-washy. I mean, we did enjoy a nice little rally there, don't get me wrong, but it just feels like it's kind of petering out a bit. We even saw a little bit of weakness there in crypto, but on that weakness, man, the buyers still are in a buying mood. And I think the number one reason is because there's not a hell of a lot of growth in this world. This world must grow. It must grow. So any area that is growing at all, it's going to grow like a weed. That's all you crypto people. Man, this is right in your wheelhouse. So the irony of it all is, it doesn't matter whether it's in crypto specifically or whether it's in like crypto proxies in the stock market. They're all going nuts here. I mean, you heard me squawking about my co-host here who sort of drives the bus. And what the hell is that damn thing you've been popping off here? DPHN, I think it is. No, that's not it. DLPN? Yeah, there it is. So the other day, these guys announced, hey, we're going into the NFT business. Come on! What? Okay, fine. Build 10 factories. Hire 5,000 employees. Here's my money. If there's any part of the economy that's growing at all, this is going to be insanity. And of course, the people that are inside the crypto story, and that speaks to a lot of you. Keep in mind, most of the people, probably 95% of the 400 million people living in North America right now, they couldn't tell the difference between a cryptocurrency and a chocolate-covered cherry. So what ends up happening is they open up their newspaper. Oh, these guys are in the cryptocurrency business? Buy it! And that's what happens. So congratulations to Kevin, killer stock picker. He's in here buying this stuff when nobody's interested. I think he was buying back here. And interesting too, you can see, Bitcoin did fall out of bed there a little bit recently, but firming up nicely. Not just completely collapsing. And then, of course, if you go through the actual individual cryptocurrencies themselves, and this is what I think this part of the market is these guys, they've all been bid up. I mean, that thing's damn expensive. I mean, could we play around on the top here for the next 6 months? Sure. But that is expensive. And same thing on Ethereum. I mean, that is an expensive looking asset. Jesus, that thing's moved up a lot. So now, I think it's like catch-up time. You know, my little KMD. I mean, you can't buy that there now. But the cool part about it is you can see when these markets go into these, you know, and 2013 was the first year I came into cryptocurrencies right at the end, and I was on sites like Crapsy. I don't know whether you remember Crapsy. They blew up. The 2013 crypto market was insane. It was hugely bullish. And then, of course, you just see, I mean, this only goes back that far. I'm sure we could probably see longer history. Nope. Give me one that's got a half decent history here. Actually, my fun little ones that I love the most. Actually, Doge probably has pretty good history here. Let's see. Yeah, there we go. So, you know, I mean, the irony of it all is this game's been going on a while. This is just going back 2014. So this was actually, just imagine the 2013 bull market. How did Doge get all the way up there? Well, because it rallied from nothing all the way up there. So this is 2014, the meltdown. And, you know, this is kind of what I think is going to happen here. Is you see, 2014 was like literally a straight down. And then, you know, this is versus Bitcoin too. So, and then 2018, right? Where's that? That was this. Now, versus Bitcoin wasn't really that big of a deal. Bitcoin itself came down quite a bit. But 2013 was huge up. 2017 was huge up. It seems to me that 2021 is going to be all about huge up. And in a weird sort of way, you know, the circle jerk is so strong with these people. I mean, I don't know whether they can take this thing all the way to $1, but I can just see, you know, coming through this summer. Remember, summer's actually the silly season for this stuff, not now. But I don't know whether, like I said, I'd be shocked if they could take this thing to $1, but who knows? But if we just do a logarithmic study here, boom, boom, I don't know, use the floor. And unfortunately with these log charts, you can't clone that, so you got to kind of eyeball it. So we got to go boom, 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 boom. So that takes us up into roughly somewhere up there. So look at that, yeah. So, I mean, I'm not, you know, predicting anything here. I don't know what the fuck's going to happen. But, see, I hate when they do the log thing. The levels move around. So let's see if I did that right. Boom, 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 boom. Actually, a little bit lower. Somewhere in there. So, not only $1, looks like they want to take it to $2, $1.80. And I wouldn't surprise that this wouldn't surprise me at all this year. But at the same time too, little worried, and especially with the amount of circle jerking coming out of these people, I'm a little worried that we could very easily have to come down and play around with these original trend line too. So very risky market, both directions. Very, very risky. Going to be a little bit of chop here, folks. And there's no way in hell I would ever consider buying there. I'm long from down here. But I don't know where I take you next, because I want to show you names that I think could do well here. But of course, you know, I'm not recommending anything. This is just my opinion. You know, a Ubik name. This is a name that really hasn't performed, and you know, through this summer cycle, this is a market that I could see do well. Because look at its old highs. I mean, it's just a bazillion. Actually, oh yeah, this is the log scale. So, boom, there we go. I mean, look at that craziness. So I don't think he's quite got going yet. But at the same time, too, can you chase it here? No, work your bids, right? Maybe see, you know, April, May. See if you can get some stink bids. This Geo, I love this Geo. And I was talking about it with the community today. At some point, this thing's gonna it's gonna make people fortunes. I was telling the good folks about things like Tube. I mean, that is a W. I mean, there's no point in arguing that. Grade 3 English teacher's gonna go, yeah, that kind of looks like a W, Brian. Down, up, down, breakout. And you can see it even closed up there, so it's confirmed. I have no idea what the hell that's going to happen here. I'm just a technician. All I do is I just go and buy these damn W's and sell halves on doubles, right? So, even right now, 0.012. Is it realistic to actually, Jesus, is that right? Yeah, so 2.12, so that's 2.4, so I don't know, say 2.5. Is it realistic to see this thing trade to this level some point over this next year? I think so. I mean, am I telling you to buy it? No, I don't care whether you buy it or not. But I am long. Just be forewarned. Library credit's a great story, but you can't buy that there. So, that's the kind of market it is. It's going to be tough to find like new W's. If anything, I would just work bids and be patient. And it's going to be tricky. You're going to get lots of FOMO, lots of, oh my God, you got to buy, got to buy, got to buy. But I don't think it's in your best interest to chase. Don't even know whether really there's a coherent message from today other than Feds are speaking. U.S. dollar did make a new high here today. I think this trade's continuing. I think I'm hearing out of Europe that they're upset that the currency is so expensive. And actually, I don't know whether I mentioned it here. I think I did. But for fun, I was looking at the yield curves around the world. And actually, all of the Scandinavian countries, all like Finland, Sweden, Norway, they've actually, all of their yield curves have inverted. So they're actually looking for a recession out of Europe, especially Northern Europe. And Northern Europe's really the economic engine there. So actually, it makes sense that the U.S. dollar is rallying and the euro is coming off. Risk on, risk off. We showed you that breadth indicator. I get the impression that the breadth indicator basically is telling us exactly what the market's doing. It's just a big blah. It's not cheap. It's actually getting expensive, and it's not really any momentum behind this move. The crude already did M out. Big counter trend rally today. They probably got a bunch of late shorters trapped here. Bonds enjoying counter trend rally, probably on that crude oil weakness. They're probably breathing a little bit of sigh of relief. Also, too, the general message I'm hearing out of the Feds is, yes, interest rates have moved up, but we're in a very low interest rate environment. And actually, I spent a lot of time talking with the audience today about sort of what you should expect for long-term interest rates going forward, and how we're in a very specific part of the long-term cycle here, where yes, we've had a bit of a bump up, and I think we have a little bit more of consolidation, then we have another bump up. But once we get up into this area, and we're kind of halfway, right? You can see we're kind of at the midpoint of this range. I mean, we could very easily melt back down against these lows. I don't know whether new sort of bond bearish bets, there's a term. I don't know whether new bond bearish bets are a good idea here. Right? Remember, this is interest rates. So if interest rates are going up, it means bond prices are going down. At the same time, too, I do think that interest rates are going to continue working their way higher and sort of normalize, as they call it. This is going to squeeze the margins. Anybody who's sort of borrowing on leverage, high credit card debt, that kind of stuff. Canadian housing market, man, it's long overdue for some sort of crazy-ass correction. It's going to be this move over the next year or two, I think, that kills them. And then, ironically enough, just as sort of everybody's screaming bloody murder, then we probably settle into, well, this is the new normal for interest rates. And this was an anomaly. Why was it an anomaly? Because, and you all now should have this grilled into your brain, Jupiter Saturn cross. These are massive pivot events for human species. And I think specifically with regard to cost of money. And it's interesting, too, how sort of the Fed speakers right now are saying that, well, the current debt situation is okay as long as we stay in this kind of world. If we have to go back into this kind of world, then and higher rates up in this area, then the current fiscal path the United States of America is on is unsustainable, i.e., they just won't be able to make the interest payments, and most of the budget will just go towards paying interest on the debt. I don't think we're in that. I think actually that happens. This part of the cycle. And it's interesting, last go round, and if you think about it, 1770s right up to the 1790s, it was the end of that system, and of course the British were bankrupt from fighting Napoleon, or well, I guess the French monarchy all over the world, and they couldn't really afford to fight another fight in the colonies, and they gave it a go, but then they gave up. They ran out of money. If anything, the French Revolution probably saved them. But the French, they basically ran out of money. Their system collapsed. Then you fast forward 100 years, 1850s, 1860s, secession movement in the United States. You could argue that that was the end of sort of that first phase of the United States of America coming out of the Revolution. And really, the banksters wanted to try and take back the power that people like Andrew Jackson took away from them. The Union survived, and actually I think was even further strengthened, because Lincoln pretty much did take back the power. Not only took it back, but the banksters were trying, by the time 1860 rolled around, to, okay, let's put things back the way they should be, and let's get rid of this stupid thing called the United States of America and the Constitution and freedom. And Mr. Lincoln, I think, basically, he stopped that tide. So then the banksters took another 50, 60 years. 1913, they were finally able to break that dream of the United States. And this whole idea of Constitution, individual rights, etc., etc. So since 1913, we basically lived in the you're the bank's bitches world. I think FDR did some deals with the banksters to get the U.S. economy going again there in the 1930s, which really didn't help the United States at all. And I think basically the Rothschilds of the world basically just stole all of the net worth of the United States of America right from underneath the Americans' noses, and they didn't even see it happen. And as a result, when sort of the next fear cycle came along, 1960s, here's this pattern again. We acquiesced and said we will move to this fiat currency world where technically these currencies are actually worthless, which is really sad. The banksters own the whole damn thing. I think the banksters have gotten away with this here, kind of like 1913 was the most powerful they were in the United States. I think 2013, especially following the financial asset crisis of 2008, I think the U.S., the private U.S. Federal Reserve Corporation now owns the United States of America. And as the classic expression goes from Rothschild's mouth themselves, give me control over the money supply of a country, and they don't really care who's in political power. It doesn't make any difference. and listening to the banksters. Now the banksters have the Federal Reserve mouthpiece in Mr. Powell, and they have the U.S. government, as Janet Yellen is the mouthpiece of the U.S. Treasury. So basically, the banksters, they control the U.S. government now, really, technically. And interestingly enough, Joe Biden, it'd be interesting to see how history paints him. I get the impression he's he's full of piss and vinegar, but I get the impression he's basically a puppet. Sad, but anyway, it is what it is. So as long as we stay in this environment, I think the banksters, what you hear from them is, hey, it's all right if the U.S. government spends more money. They still have room to make more interest payments. Not even talking about the actual debt or ever repaying that debt. Now the banksters are manipulating the economy based on what interest on that debt can society actually sustain. And of course, you all need to understand that when they perceive that the economy itself has gotten to a point where it is spending too much money on things like social programs and on defense spending, and society cannot make those interest payments, that's when I think the shit will really hit the fan. And believe it or not, that would make perfect sense for my sort of cycle thesis that we're going through a greed cycle right now. So for the next 10, 15 years, all you're going to hear about is COVID, stimulate the economy. What I hear from the banksters is they want the politicians to invest in things like education programs and staffing programs to get the slaves back to work and more productive and earning more salaries, higher salaries down the road, so that, of course, society can pay higher taxes to service those debts and pay the banker tax. And I think that's going to be sort of the dominant message. And my hunch is when this rate starts to get up into areas that it's getting a little unsustainable, then we're probably going to see, quick stock market crashes. They'll call them corrections, right? Whatever. And then, of course, more money printing when all hell's broken loose to support the parts of the economy that are just absolutely reeling. And we just keep going through this, right? And it's you could call it Japanification. I've been using that term now for a couple of years now. And I think that's the world that we live in, folks. Get used to it. And as I said to you before, people that can identify the only areas of the economy that are growing, crypto. You people should get absolutely stinking rich. Like this crazy stock that basically was not really doing anything a week or two ago, all of a sudden announces they're going into the NFT space, and bang. That's what I mean by getting stinking rich very quickly. And I got a funny feeling the next year it's going to be like this. And I don't know whether it's crypto stocks or whether it's crypto itself. Of course, people that are just crypto kind of people, they would actually spit on this kind of participation. They hate this. But what's interesting, too, is there's some guy on social media who's barking at me about some sort of nonsense. But anyway, if I understand correctly, the crypto space is actually going to try and take over this space, which is fascinating. I think this will come to loggerheads, of course, if Big Brother doesn't like what they're seeing, and maybe that's sort of the scenario that this stuff just gets bid up to absolutely ridiculous levels into the end of this year. Typical 13, 17, 21 cycle, and then we spend a year where the regulators are like, oh my God, we got to do something, control these stable coins, outlaw Facebook's currency, whatever. And we go through a year of correction. So, that's your backdrop. Kind of a weird world we're living in right now, I'll tell you that much. Like I said, it's nice to see risk rallying back here smartly and not having to do it on the back of like a bazooka. Now, problem here is that's in the context of already topping out markets. So, let's see how this goes. I do find it interesting that, like crypto in particular, the most recent short-term setups that we had here, you could make the argument that we had bot setups that fired off of this level a while ago. And these guys sold half, stop at scratch. So they're not really even thinking. And right now, these guys, their target there is 72 Gs. So we then moved up. These guys got their 2-to-1s hit. These guys got their move stop to scratch level hit. So that's still way down here. Then another bot sets up. But you can see this one, we noticed that we had this sort of war between sort of the bulls and the bears develop here, where you got pretty well-defined W's and pretty well-defined M's on both sides of the battle lines. And we came down and the bears really pressed their case, and I think they pressed it more on things like ETH than Bitcoin itself. The French lines, they broke momentarily, but there just weren't any Germans left. Maybe one or two guys got through, and then the French quickly enveloped them and closed up the hole, and they actually put a bottom in here. I do find it interesting that we painted this sort of, usually these triangles resolve 2/3 the apex of the triangle. I was wondering whether yesterday this was a little bit of a bullshit move. And what's interesting is that on this move down in here, the volume just totally dried up. Momentum indicators started going into divergence. So it's kind of like, is this a trap? And it turns out it was. And then we went after the stops. They rang the stops, ding, 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 ding. There wasn't that many orders there. Then there was nothing on the other side of it. Path of least resistance. She came snapping right back up. That's just the way it is. It's the way trading goes. Since this was a first low, so I got one low, two lows, we might get another bot set up here. You can see how it's interesting. I still think the market is operating off of these bot levels. It's just now you just got to adjust them down to that low. Interesting to see what number that is. 52,933.03. Usually I find these markets like to pivot on round numbers. So like there, 59,957 even. And I think we said this high, 61,700, right on the nose. So, no, actually there's the high, beg your pardon. So that's actually not true. 81.83. So the fact that these are actually odd numbers actually leads me to believe that neither one of these is actually a long-term pivot point. Kind of funny. So we'll see how this goes. We're coming up on that 2/3 apex. Actually, now is when we should actually expect to see the fireworks here. And I've been watching, things like momentum. Interesting, our little RSI study. First W should tell the bull, or the bears, if you're a bear, right? First W tells the bears to cool their jets. Second W is actually a buy signal right there. Usually I paint those in yellow like that. And if this second W comes in on a move back above the 50 line, then actually that's a pretty damn powerful signal. But you notice that that's 40. And we're just now getting up to 50. So I would consider this a weak buy signal. And that came in right here. And you can see, we're not getting a hell of a lot of movement here. If anything, one low, two lows. I'd like to see a third low here come in, especially since that is the new bot level. And we might be getting told to get back on the bot long side. That's a trader's life. This is such a great analogy of a trader's life. And the irony of it all is these botters, they're like looking at these guys going, you guys are fools. We're long from here. We're laughing. So, go figure. It is what it is. Trader's life. So lower time frame players, getting a little chopped up here. And really, that sure looks like a sideways market to me if I've ever seen one. And I think we can make the argument, you start seeing price, especially if you get like candle closes down below this level. Then, another big M and we're probably done. And if that close comes down in here, that'll tell these botters to get the hell out. So I think it's pretty straightforward. For the short term, got a little bit of an uppy market here. How far this goes, I don't know. We're coming up to that 2/3 apex level. So now is actually when I would expect to see some fireworks here. So let's see what happens. Hey, and if you're really lucky, maybe, Fed comes out and says we really endorse higher asset prices. We want to see the market up, and this thing just fucking launches. Right? You never know. It's a trader's life. I don't think so. Right? That would be on this second M coming through the 50 line. What's probably going to happen here, if this does continue on, is we get another W, and that W, unfortunately, will be our third one, and unfortunately, the third W is usually the noob trade. They usually come in a bit late. We usually like to color that like purple. I can do that or not. No, we'll select it. Anyway, it doesn't matter. You know what I'm thinking. And usually that's the end of the run. So I don't think we're going to get a blast off here. If anything, I actually do like the idea of that end purple, then a big M, and then we get, okay, this is serious. So let's see what happens. But over the next 24, 40 hours, I think we're going to get a signal as to which way this thing wants to go. All right, I've been blabbing away here for about 45 minutes, so I don't even know whether I gave you anything constructive to work with. There's not really much for me to do on something like the corn. And we're at, nosebleed levels. Do love the little shit coins. Interesting to see shit coins working up, but they seem to have accepted above 877 here. So if that's the case, and Julian found a new level, I don't know the logic behind it, so I'm not really going to talk too much about it, me personally. But he seems to think that 16.88 is now the next sort of number in this geometric progression. So that means that if shitcoins really want to get going and they've resolved through 877 here, oh boy, look out above. And that would actually make perfect sense with what I'm seeing out of here. You can be in Bitcoin if you want. You can be in Ethereum if you want. But I'll tell you, they're not doing things like this right now. That's just insanity. They're not doing things like this right now. That's just insanity. Thank heavens I got smart people like Sjord on my team. And Sjord has us very invested in these kind of names that are just killing it right now. So thank you very much, Sjord. Hugs and kisses. This is probably the part of the market that's super sexy hot. It's just a question of finding these damn things as they're Wing out. Don't chase, don't chase, don't chase. Try and find those damn W's. And I think I showed you a couple like that Geo, Ubic, Justin Sun name, Tube. I mean, there are a few that are just quietly going about doing their bottoming thing. All right, think I'm going to leave the rant at that. Sure hope you enjoyed the offering. All the best and bye.